Good day, everyone, and welcome to FXDD Live Education. Learn how to trade harmonic patterns in 5 simple steps. My name is Nenad, and today I will show you harmonic patterns. So before we start, have in mind that Forex trading carries a high level of risk that is not suitable for all investors. Please educate yourselves on the risks associated with Forex market before you start trading live. Everything you see and hear from me is my personal opinion only. Use these web addresses to sign up for more live educational and live trading webinars. Now, let's start. Today's agenda: what are harmonic patterns and harmonic patterns presented? So, harmonic patterns is so-called trading technique for Forex, stocks, and commodities. Forex and other harmonic patterns identify the best times and opportunities for buying low and selling high with high probability and low risk. All of those are mostly reversal trading patterns. Harmonic patterns are also shown in nature, and they are found in nature, and they give us usually high probabilities. They have been used for more than 75 years. Harmonic patterns trading involves selling at highs and buying at lows, and in that case, we have a very good, sometimes great risk to reward. By trading harmonics, assumptions, bias, expectation, intuition, and emotions about individual trades are taken out. So I personally have been studying harmonic patterns for quite some time, and I have found that all these harmonic patterns that show up, they're mostly accurate, but there is a bit of subjectivity within it. So you need to find a proper technique to actually exploit fully these harmonic patterns. Mr. Scott Carney is the creator of harmonic patterns, and if you want to know a bit more about it, I advise you to buy his book and read about it, because he is the creator of this. I have personally modified a few things to suit my own trading style, but let's say that during testing phase, some harmonic patterns I found to be quite useful for confirmation of, let's say, so-called counter trend trade opportunities. Now, in regards to harmonic patterns, we already know that the key Fibonacci ratios are the golden mean 1.6218, its reciprocal, that is 0.6218, and their square roots 1.272, 0.786, and their fourth roots 1.128 and 0.886. All of those are harmonics in the nature. But we also use other ratios such as 9, 14, and my favorite is 78.6 and 88.6. Now, I will show you different patterns, namely ABCD, 5-0, bat, sharp, Gartley, and 3 drives. And those are harmonic patterns that are created by Scott Carney. Then I will open real chart, and I will show you that with an indicator that I have, and you will see how the indicator actually find excellent trading setups here on the FXDD platform. Now, again, facts. They're popularized and named by Scott M. Carney. Those harmonic patterns use retracements and ratios. They can be either continuation or reversal patterns. Mostly they're reversal. And if you want to know more about it, you need to read Harmonic Trading Volume 1 and 2. So this is ABCD pattern. You see there is an A, B, C, and D. From A to C, we see 1.6018 or 0.618. From B to D is 1.272. How you actually derive those ratios is just by placing a Fibonacci retracement indicator, and you will see that from point A to point B and point C, this is actually 61.8. This is 1.272. For all these patterns, we have these ratios, and that is what is very important for you to understand. Also, we have bearish ABCD, and you see from A to C, we have 61.8, and from B to D, we have 1.272. So this is ABCD and bullish and ABCD bearish. This ABCD pattern is found in most harmonic patterns, and it's very, very good that you can find ABCD within any of those harmonic patterns that we will talk about. From A to C, 61.8 to 78.6 of AB retracement can be also derived as A to C. So sometimes we use deviations. So if deviation is approximately 15 to 20%, then we say that from A to C is not strictly 61.8, because market will rarely print out the exact ratio, but rather it will be in between 61.8 and 78.6. It's similar to classic ABCD, where we have 127.2 to 161.8 of BC. Okay. Now we have ABCD, where time of AB is equal to time of CD. And the CD has a distance of AB. And we have ABC extension, where the CD is 127.2 or 161.8 longer than AB. Then we have a Gartley pattern. Gartley pattern needs to contain inside it ABCD. So you see there is ABCD, but there is also point X. See here, ABCD and also point X. You don't need to memorize how they are formed, but it's important to know that they look like M and W. Bearish Gartley actually looks like a bullish W, you see, but it's actually bearish. While bullish Gartley looks like bearish M, but it's bullish. The difference is that from X to D, there is 786 of retracement, but from A to C is similar as we have with ABCD. Okay, 38.2 or 88.6. Here, the same thing. 5.0 is a 6-point retracement harmonic pattern that cues for big market movement. I'm now talking, guys, about theory. I will show you when I finish with the slides how you can trade them on real charts. Okay, my trading technique for harmonic patterns. Just watch now this theory before we delve into live charts. So 5.0 is 6-point retracement harmonic pattern that cues for big market movement. Now, bearish 5.0 is basically, we start with 0.0. We have a pattern that is similar to the M pattern, but we have O, X, A, B, C, and D. From X to B, it's either 1.13 or 1.618. From A to C is either 1.618 or 2.24. From B to D is 0.50. Similar here for a bullish pattern. But the thing is that when this happens, guys, okay, the price from point D on bearish either drops or drops significantly, breaking the previous support on C. On bullish, the price either jumps or jumps significantly, breaking previous high on C. Bullish 5.0 and bearish 5.0 was one of the later patterns to be discovered, and it would be grouped in the category of retracement harmonic patterns. One of the most popular patterns is the bat. It is a retracement pattern. It looks like W bullish and M bearish. Again, the bearish bat is very similar to W, but it has extensions. From X to D is 0.886. From X to B is 0.382 and 0.50. And from B to D is 1.618 and 2.618. So anywhere between these numbers, guys. Similar for a bullish bat. Okay. This webinar is being recorded. It will be uploaded to YouTube. So you're free to pause your screen and watch it later as you wish. The shark pattern is traded from the C point. It's one of my favorite harmonic patterns. It's also emerging 5.0, 5.0 or 5.0 or 5.0 pattern. And also it's important that D stands at the confluence of ABCD and 50% Fibonacci on the BC leg. So these ratios here are important to identify between all these patterns. It's very hard to do this by your own hand. That is why you need to find a proper indicator that will show these patterns as they are originally grouped. I have that indicator and I will show you that on the real chart. Then we have the butterfly, and the harmonic butterfly pattern is an extension harmonic pattern where the point D exceeds the X point. It is used to trade highs and lows at key reversal points. Key points for a perfect butterfly is that B point must be 786 Fibonacci extension of XA lag. D point should ideally be 1.27 extension of XA lag. And D point must not exceed 2.618 extension of XA lag. It should contain A, B, C, D. And tree drive, it's a common pattern similar to ABCD with 3 lags. It has 2 corrections or retracements. Point A should be 61.8 retracement of dry 1. Point B is 0.618 retracement of dry 2. Okay, you see how it looks. And now, guys, on the real chart, this looks exactly as this is shown. Okay, I will open the chart right away. And you will see that I have the indicator here. And basically, this is the pattern that you can see. It's called also the Fox. Okay, now I will just give me a few seconds so I can actually show you a little bit of text so we can easily see how it shows the text. Okay, give me just a few seconds. Okay, and here we go. So this is called Flying Fox. It's similar to butterfly, but you can see how the price actually goes. Now, the point of these harmonic patterns is that you trade them when you have a confirmation, because the point D usually can exceed. Okay, so it can redraw. So let's say that point D started to be drawn here, then price dropped, then dropped again. Finally, the confirmation is a breakout of those important ratios. I usually follow by a candlestick pattern or with another breakout of these important ratios. So for me, for example, the qualifier for this trade would be a break of BC or XA here at this spot. Alternatively, you can place a trend line and wait for a trend line to break after the point D has been printed out. Another technique that I use is you can go with the standard indicator. You can put, let me show you, a relative strength index set on period of 14, and also wait for a trend line on RSI to break. For example, here, guys, we have an RSI indicator, you see, and your confirmation would be at the break of the trend line. If it's hard to make it with 14, you can place at RSI at 9, and then you see the difference. Now you can make this trend line easier. Now, either a normal trend line or a standard RSI trend line charting, like I showed you also here on webinar. So basically, this would be here. This is the entry on a trend line. And here we have an entry after a breakout of the RSI trend line. So it's actually here. And you see how the price went subsequently. The higher the time frame, the better it is for finding a proper pattern, okay? Let me show you some more examples. Here, you see the euro dollar, for example. Yeah, we already saw this. Then we can try to scan for more and see if there are any patterns. Have in mind that all those patterns will be natively very hard to show on real time frames unless you have the indicator to show that. Okay, let me find it. I will actually use here. We have so-called, guys, this is so-called C pony pattern. That is also one of the patterns that the indicator can identify. No matter which indicator you use to identify bearish patterns, standard rules apply. For me, it's either the break of the trend line or it's actually RSI break of the normal trend line, RSI trend line, or a break through all of these ratios here. For example, if I put a trend line here, okay, my entry would be actually here, exactly at this spot. If I use a CCI trend line, okay, we have a steep trend line here, okay, and you see the point of the breakout would be here, exactly. exactly at this spot. You see, no matter what, usually both trend lines and RSI trend line will be in a sort of confluence. Trend line sometimes will give you an earlier entry, while RSI sometimes will give you a little bit later entry. But you see, the point is the same. The break of the trend line or these ratios can also be shown. Let me just quickly clear the chart, and I will show you how it can also look here without all these lines. So here, this indicator that I have shows, for example, the ratios. And I usually want to see that when I see the breakout, I want to see as many as these ratios are actually taken by a single candle. That is why I prefer to use bearish or bullish candlestick reversals. Here we have a doji, and you see that doji actually took 4 of these lines here. 1, 2, 3, 4. The break of this doji could also be the entry here. Let's try to find some more. I usually watch this on 4-hour time frame because I've noticed that higher time frames are definitely much stronger than lower time frames. Here we have, again, a C pony, okay? And have in mind that this indicator that I'm showing can identify all of the patterns that I show and much more. And we are going through live charts. So how you trade this? Again, watch for big candlestick reversals. Watch this. It took out 1, 2, 3, 4 ratios. So I would go with either this entry or, again, a trend line break. Now, here in this example, the trend line is actively a bit higher. So for me, this is a no entry. I don't enter here. So with our RSI, I have also an entry that is confirmed here, exactly at this spot, at the break of the trend line. So there are very simple steps, guys, to take when you take trades on harmonic patterns. The first step is, as I say, it's very hard to identify patterns yourself. Use an indicator. I leave it up to you to use any indicator that you want. This is not my indicator. I have bought it, so I will not market it. But if you have a reliable harmonic pattern indicator, use it. But for entries, I know that's the biggest problem with taking harmonic patterns into consideration. Entries, watch for the bullish or bearish candle that takes 3 to 4 ratios in itself. Like here, you see 1, 2, 3, 4 ratios are taken out by this bullish candle. So this could be the entry immediately here. This also could be entry where the arrow is, because you see 1, 2, 3, 4 of these ratios have been taken out, or from 1.401 BC to 1.130 BC. You see, very good. Use trend line break, or RSI trend line break. They will give you very, very good entries. So this is how I trade harmonic patterns. And if you want to know more, again, I advise you to read Mr. Scott Carney's book about Volume 1, Volume 2 about harmonic patterns. But if you ask me, this is how I do it, and this is my own version of trading harmonic patterns. So trend lines, bearish and bullish candles, big one, they take at least 3 or 4 ratios. And of course, we can also use trend line breaks, normal trend line breaks, like I'm showing here. Depends which comes the first, because as soon as we enter the trade, we need to place our stop loss and target prices. Regarding stop loss and target prices, guys, I myself do it with pivot points. I'm a fan of Camarillas, but you can also use your own pivot points. Of course, because you trade Fibonacci's, you can also use Fibonacci extension tool to also place 3 target points by default. Fibonacci extension tool or expansion tool is found here. You can place it easily on the chart and try to find also targets by the Fibonacci, by this Fibonacci tool. For example, here I will use just this example. If you have any questions, you can ask me. Okay, so for this example, we are going to use, you see here, okay, and I'm placing it all the way down to the entry point. You see, all the way down to the entry point, not here, but rather here. This is how I do it. Okay, and if you don't see it because it's natively yellow, we go to objects list and we just change the color. Okay, so we will change color from yellow to blue, and we will easily see now this tool. So here we go. See, there are three targets. The first target is hit. The second target also. The third target was just missed by a few pips. So you can also do it that way. So guys, I hope that you enjoyed the presentation about how to trade this. If anything is not clear, feel free to comment in the section below the video. I'm here at your disposal, always helping you to achieve Forex trading success. Cheers, guys, and trade safe. See you soon.